So every once in a while, I get ready to make a YouTube video, and sometimes I'm more excited than other videos. And this is one of those rare videos I create that I'm actually very, very excited to share with you. I've got some stuff I want to show you in this video that I think is very important, that's going to make you think from a different angle than maybe traditionally thought. And the premise of this video is I buy the dip and I keep losing, right? Which is definitely a situation I've been in for many, many months now, and I think a lot of other investors are as well, where you continue to buy the dip in different stocks or the market in general, but usually individual stocks, right? And the stock price just goes lower, and it's like every single share I buy the stock, I just lose money in. And so right off the bat, I want to give you an example of PayPal. Okay. By the way, thank you FTX for sponsoring today's video. As always, being our crypto partner, check out first link in the description down there if you want to sign up for FTX and get some free crypto. Pretty awesome. Also use referral code HolySmokas. PayPal. This is a stock that's down 72% since August highs. 72%. Okay. Now, I started buying this stock a few months ago when it had its kind of, let's call it last big crash. And these are all the shares I've acquired. We're all in this price range, essentially, right? Every single share of PayPal stock I have bought, I am down on those shares. Every single one. And that's despite already feeling like this stock was of tremendous value when I was buying it, and a great company, cash flow company, low metrics, all those sorts of things. And yet every single share I bought of this stock, I am down on. And some of those shares down quite substantially too, like 20, 30+%. So it's not like it's a small amount, right? And for a great company, look at something like Shopify. This is not a stock I personally own right now, but this is a stock that's down 73% since November, right? So about 6 months, the stock's down 73%. So it doesn't matter what price you bought Shopify at any point in the past 6 months, you are down on those shares, and you're likely down massively. Not only that, if you bought Shopify at any point in the last couple of years, you are down massively. And so Shopify is a great company that has a great future in front of it, but it doesn't matter what you're buying the stock at. You are losing money on this, and it's painful, right? Because you could look at Shopify at, let's say $650, and you're like, this is a great deal. Like, I think Shopify is going to be $3,000 in the future because of blah, 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 and, the net income and where you think the revenue is going, right? And then that stock drops, 40+% from where you start buying. It's like, seriously? Like, really? This is going on right now? And this is what we see transpiring in the market. You look at a stock like Google McDougal. I think this is very, very important for everybody to see this. Google is in jeopardy of going down on a 1-year basis now. If this goes down on a 1-year basis, then this would mean essentially that Google, a great company, I mean, it doesn't get better than Google. Like, come on. This is a potential here where it doesn't matter what you bought Google at in the past year, you were down on your shares, right? And this is not some speculative stock and some meme stock or some, wow, I can't believe how high its valuation is. It's not one of those sorts of stocks at all. But this stock's in real jeopardy. Like, it has 1 more or 2 more rough days, and it'll be in the negative on a 1-year basis, which means every single share you've bought in this stock in the past year, you were down on, right? And that's for, like what you would consider one of the safest business models. This is goes all the way back to August of 2020, Amazon stock. If you bought Amazon stock basically at any point in the last 20 months, roughly, you were down on your shares of a great, like, it doesn't get better than Amazon. When you talk about the e-commerce business, AWS, everything they have going on, the advertising business, and here you are in a situation that every share you've bought of this stock, you were down on. And it's just like, can we get a break, right? And so this is what you see consistently in the market going on, right? Now, Tattooed Chef. If we want to go into a few smaller caps, I've been killed on Tattooed Chef. I would be a liar if I said I haven't, right? This is a stock that almost all the shares I bought in the stock are between anywhere from the 18 range to 10 range, right? And I think I bought some yesterday for like 9 something, and even those shares are lower. Every single share I've ever bought at Tattooed Chef, I am down on. Every single one. It's not like I can look at some shares and be like, well, those ones I'm doing really good on. Nothing. Every single one. You know why? Because the stock's at an all-time low, and it breaks new all-time low after new all-time low, right? And in this sort of market, the long-term whatever you got going on, right? The market doesn't care about that right now. The market doesn't care about where Tattoo Chef's going over the next 3 years or 5 years. The market cares about where it's going over the next 3 to 6 months, okay? And so every single share I bought in this, Oatly, I love this stock for the long term. I mean, I absolutely love it. I think this is going to be a massive moneymaker for me. Every single share I bought of Oatly, which I've been buying this stock, a lot of shares so far this year, right? Every single share I bought of Oatly is down. And I bought this stock at $6 and $5, and I was like, I don't think this can really go lower, right? And then I bought it at $4, and now it's at $3, right? And so every single share I bought at Oatly, incredible growth company. One of the strongest growth companies you'll find in the food and drink space, even faster growth than Tattooed Chef, which is incredible to think about. And it doesn't matter. It doesn't matter. Every single share I've bought of this stock is down. Honest. They sell flipping flapjack and diapers. Like, are you kidding me? In makeup. And they've been executing the business model very, very well, over the past year. But it doesn't matter. I love the stock under $10. I bought these shares at $9. I bought them at $8. Bought them at $7. Bought them at $6. Bought them at $5. Now I'm buying them at $4. Every single share I've ever bought of Honest is down. Every single one right now. Every single one, right? Isn't that incredible? You look at a stock like Alibaba, not a stock I personally own, but if you bought Alibaba at any point in the past 5 years, you're down. And down a lot. At any point in the past 5 years, if you bought Alibaba stock, you were down in the stock, right? And, obviously Alibaba's a great company, but it's a Chinese company and no one wants to own that sort of stock. And so, that's painful. That's probably the most extreme example of all these examples I've given you here today. But, that's vicious, man. Over a 5-year basis, every single share you've ever bought, you're down on that. That's just incredible, right? So, first off here, NASDAQ's in bear market, or right around bear market once again, right? Now, in a bear market cycle, and let me show you the Russell too. The Russell's also in bear market once again now. Now, I think it's important to understand when you are going through a bear market, it doesn't really matter what you're buying for the most part. You're going to likely go down on those shares. Sometimes there might be a few places to hide out where maybe they hold up better. Like for instance, if you're in a bull cycle for oil and gas or something, hiding out in oil and gas stocks. But for investors, which I think the majority of people that watch my channel, you're investors, right? So you're not trying to time these things out because you're not trying to plow your money, let's say, out of growth stocks and I got to get into oil and gas stocks now because that's the play, right? Because, that's a dangerous game because oil and gas stocks can also flip and the next thing you know, those babies are down 30, 40, 50%. So for us that are investors, it doesn't make sense for us to try to let me get out here and let me get into this sector and we're going to rotate money over here. That's just not a game we play, okay? But that is a game Wall Street plays. And sometimes there's spaces that hold up better in the market than others. Now, in a bear market, when you're going through a sort of a bear market, right, you can buy almost anything and you're likely going to go down on shares, down on value on the shares you buy, right? And so you put $1,000 in this stock and you lose money on that, and you put $1,000 in this stock and you lose money, and it's a very helpless feeling when you're in a bear market and you're consistently losing money, right? And you're like, dude, I'm buying the dip and it's not working. And I bought the dip again and it's not working. And the thing with the bear market is it can go on for some time. Sometimes bear markets can last many, many months. Sometimes they can even last a couple years. And here you are in a situation where you're taking your hard-earned money, you're plowing it into stocks, and they're going down in value. And you're like, dude, my $1,000 is now worth $900 and $800 and $700 and $600. And it's like, when does the pain ever end? And you're looking at the stocks down 60%, 70%, 80%, and you're like, how can it go down anymore? This is absolutely insane. And this is a type of thought process that starts, you start having obviously in a bear market, right? Now, what I'm showing you here essentially, this is the NASDAQ during 2007 through 2009 crash. And the peak here was in the summer of 2007, and the trough was in right around February or March of 2009, right? And in that, all the indexes ended up falling over 50% by when it was all said and done. The Dow, the S&P 500, the Russell, the NASDAQ, they all ended up falling 50% peak to trough, okay? Now, in this cycle, you could have obviously been buying, and I can guarantee you if I was in the market back then, I would have been buying this whole way down and the whole way up, right? And that's just my strategy at the end of the day, right? But if you were buying during this time period, you lost and lost and lost. And everything you bought just ended up going lower and lower and lower, right? Now, at the end of the day, you ended up buying some great shares and ended up making a ton of money in the end, right? But you can't deny the fact that for a year and a half, roughly, every share you likely bought, you lost money on, right? Now, some people say, well, why didn't you just buy right here? This is a perfect price. Come on, man. Like, come on. No one buys at the bottom like that. That's not really how it works. And the thing is, when you're in one of those sorts of, let's call bear markets, crashes, whatever you want to call, what that was, right? You're going to get some even false breakouts where, the market looks like, oh, it's starting to come back. Things are starting to get better. And you can say, well, maybe we bottomed here, right? And so then you start buying here, right? It's like, oh, we hit a bottom. Okay, we're starting to uptrend again. Now buy. And then you really get ready for the real crash, right? That ended up happening. So that's not really something that works out. And then if you're getting that trader mentality, then you're likely to all of a sudden trade around and like, oh, we got double dip recession fears. I got to get back out of the market. We're going to fall back down to there. And that's just not obviously a winning game. So at the end of the day, you look back at a time period like this, right? And the ones that ultimately they looked like idiots in the short term, right? Everybody, and there weren't that many people buying, but there were somebody always buying the shares that somebody's selling, right? If you're in the market in those years, in 09, in 08, and 09, and you were buying stocks, you looked like an absolute idiot in the short term because every single stock you bought, you were losing money on. And somebody could easily look at you and be like, dude, what are you doing? You're losing money. Every time you buy a stock, you're losing money. And there's nothing you could do to save that situation, right? That's just the way it is. But at the end of the day, let's say you were buying, I don't know, whatever, where the biggest NASDAQ stocks at that time, or whatever the most exciting growth stocks, which obviously like Apple was a growth stock back then. Nowadays, Apple's a value stock. You were buying, let's say, Amazon. You were buying Google and some of those stocks, because those were like the big growth stocks back then in those days, right? Now they're seen as more value stocks, even though they still have growth, but it's not like it was back then, right? And so you're buying all those stocks, losing your face every single share you buy, and you look like an absolute dork in the short term, like an idiot. Like, what are you doing? But ultimately, it ended up being the massively right decision, right? And so you had this tremendous opportunity for 1 to 2 years where you got to just buy shares and on the downslope and on the upslope, right? And get a lot of stocks at prices that you could never even conceive of these prices being hit, right? Which definitely reminds me of a market we're going through right now where a lot of these stocks are hitting prices that they haven't been at in years. Like a lot of these stocks are at either all-time lows or multi-year lows, meaning like you have to go back to 2020, 2019, 2018, 2017 to see some of these stocks back at prices they're at right now, right? And you don't get that to happen in the market very, very dang often, right? Now, we go back to another time period in my investing career that you could have been in this situation as well. August 2014 to February 2016, there's a high probability that every stock you bought during that time period, in February 2016, you were likely down on those shares. It was a very, very tough market from the end of summer of 14 to basically winter of 2016. Very, very tough market. And so, you could have been buying stocks all in here and buying stocks. And by the time February 2016 rolled around, you probably were down on shares, right? And so, and it's very, very painful to go through that when you're buying for that extended of a, that's a year and a half. You were buying stocks for a year and a half. And where did you get with it, right? Where did you get with it? You were nowhere at the end of the day. You were nowhere. You had a bunch of shares, but you were likely down on all those shares that you were buying and buying and buying and buying. And during that time period, a lot of the best big tech companies went through a lot of troubles. And there were a lot of stocks back then. I remember, I think Square stock, for instance, if I recall back then, was under $10 a share. And, Square was under 10. And I mean, that stock's dropped off a cliff. That stock's crashed and it's still like a 10x from where it was at back then. And you look at countless stocks during that time period, man, versus where those stocks are even valued now, even after this market hit. And you're like, geez, man, what a massive difference here, right? And so you look at October 2017 through January 2019, basically just about every single stock you could have bought in the market, by the time January 2019 rolled around, you were likely down on your shares, right? And so there you were in a moment where you're like, everything I buy, I lose money on, right? And I went through this market, and this was a market I went through publicly, right? Obviously, because I already had the YouTube channels. I created YouTube channels in 2016, and they really started to take off in 2017. So this was a market I had to go through where dude, just everything I bought just went down in the short term, right? From basically starting about August through January of 2019, everything I bought just down, 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 month after month after month after month. And I'd come out with 3 stocks I'm buying or whatever, and those stocks would just go down. Like every single time. It was like, oh, it's guaranteed to go down. They're going down. And it didn't really matter what I was buying. I was buying like great companies like Skyworks Solutions and Facebook and Tesla, which at that time wasn't really respected as a great company. It became a great company over time, but it wasn't respected as a great company back then. But I was buying, I think I got an Elf on the Shelf probably toward the beginning of 2019 as well. I was buying great companies, but these companies, it didn't matter. It didn't matter. The market was going down, and it sent all my stocks down. And so during that time period, it was just down, 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 basically day after day, week after week, month after month. Now, here we are in this time period, right? This is what I pulled you up here is a chart on the NASDAQ from December of 2020 through today, which now we're in late April of 2022, right? NASDAQ's down. Basically, every single stock you've bought in the past year and a half, you're probably down on those shares, right? There's a few winter chicken dinners every once in a while here and there, right? But for the most part, everything you've bought during this time period, you are likely down on, right? Which is pretty darn painful. And this is a time period when a lot of investors got in the market, right? And I would say probably, I don't want to say half my audience, but there's probably 30% or 40% of my audience watching this video right now. You are somebody that started in the market somewhere around this time period. That's when you got in the market, right? And so for you, you've never really seen, and you saw this kind of up cycle here, but then it just turned into a down cycle. So you're at a point where you're like, dude, do I ever make money in the stock market? Like everything I've bought during this time period, I'm down on as of today, right? And it's a very, very painful endeavor, but you got to understand what you're doing at the end of the day is the right decision in the long term, and will end up being the right decision over time, right? But you have to go through these time periods when you are just going to get absolutely destroyed, decimated. Everything you buy is going to go down, and it's a very, very helpless feeling. But at the end of the day, it's a very short-term thing. It does end, and stocks end up long-term being valued where they should be valued, right? And a lot of these stock prices will be massively higher 5 years from now than they are today. And that's whether you're buying some of the great small caps that have tremendous growth in front of them. That's whether you're buying companies like the Shops and the Amazons and the PayPals and companies like that, right? Those stocks will be much, much higher 5 years from now than they are today. But that's not to say they can't be lower in a month from now than they are today. And so don't get your hopes up that magically we bought them or something like that, because I just showed you guys several different time periods since I've been in the market where the NASDAQ, the S&P, the Russell, those went through a year and a half of basically just kind of going nowhere. And that's where our market's been. Like I said, the NASDAQ since December of 2020 is down, which is incredible to think about. But that's the sort of market we're in right now. And so for everybody watching this at the end of the day, you got to always make the right long-term decision, right? And the right long-term decision is to buy great companies that you love for the next 5 years and call it a day. And no one ever has enough money in this sort of market, right? Including me and every single person watching this video. We never have enough, right? Because there's so many deals out there right now. Like literally, it's almost overwhelming how many stocks are at insane discounts right now and trading at multi-year lows and all-time lows that it's hard to even fathom, right? And it's like, where to even start with buying these stocks? But that's also, in my opinion, a fun time, and it sucks to not win on almost anything right now. But at the end of the day, a lot of these companies are massive winners over the long term and will 2x, 3x, 4x, 5x, and a lot more than that. And you just gotta get through the pain, and whether that pain lasts another month, 3 months, 6 months, 12 months, whatever it is, we'll deal with it. And at the end of the day, we'll come out and we'll have made a fortune, and that's just the way it goes. And unless you're pessimistic on the entire rest of human history when it comes to stock market and those sorts of things, which I am not. I choose to always be an optimist, and the optimists are who always end up making the most money long term. That's just the way it goes. So anyways, guys, hope you enjoyed this as always. Hope you got some real good value out of this video, kind of explaining this, breaking this down the way I did there. Try to do it as simply as possible. And make sure you check out FTXUS, first link in the description down there. Get up to $100 in free crypto. Use the referral code Holy Smokeless. Much love and have a great day.